Well, good afternoon, everyone, and welcome back to our series on Virtual Connect with the architecture profession. We're glad you could join us today. We've got a very timely topic queued up for you on financial planning and decision-making in a time of economic uncertainty. One of the nice things about doing these webinars is we get to not only spotlight the people that we rely on to give us great advice, but the programs that we do that have been really useful to our members. This comes from us to us from the Business of Architecture series, which normally it's a commitment over a several week or even month period with a cohort of applicants to go through a lot of different ways to run a firm and talk about firm management. But we're able to break this down into smaller chunks because we're in a little bit different way of operating in our new stay-at-home environment and remote working. So this is one of the, I'll say, the greatest hits of that Business of Architecture program, and we're delighted to offer it to you today. A little bit of housekeeping notes for you. We are going to have a Q&A function, as always. That is in your Zoom bar at the bottom. If you have a question that you'd like to ask our panelists, we will get to that. If it's something that is in real time, I'll make sure to get that put into the conversation. If it's something we can wait until afterwards, we'll do that. The format today, we're going to have Doug present several of his notes by PowerPoint, and then we'll have time at the end for some Q&A. Everyone participating today gets one learning unit for attending today's session, and to get the full unit learning, we need you to stick around till the end to get the credit for the full hour. So without further ado, I'd like to introduce our panelist. He's a great friend of ours who's helped us through many of our programs, and not only that, has worked with a lot of different firms and individuals to advance the profession. Doug Parker is the Chief Business Advisor for Design Business Advisors. Doug has a uniquely integrated understanding of business, firm operations, and design that makes him a recognized leader throughout the industry. As a firm managing principal at the Greenway Group, he combines his expertise working with leading firms throughout North America with experience having served as the Chief Operating Officer of Design Workshop and has more than 20 years as Director of Sales and Marketing to architects and designers at Steelcase. Doug's the author of several tools, articles, and processes that bridge communications, provide role clarity, and leverage the value of design throughout the project delivery process. He's consulted with architecture, engineering, interiors, landscape planning, and construction firms, as well as building product manufacturers. His expertise includes strategic planning, operational excellence, organizational design, and leadership coaching. Clients include small to mid-sized local firms, as well as global practices. So Doug, welcome. Thank you for joining us, and we turn it over to you.
Okay, welcome everyone. Can everyone hear Mike? Is the sound okay?
Sounds great.
Okay. Well, I'm delighted to do this. And as Mike said at the end, we'll have some Q&A. And if something that you individually, you'll see at the end my contact information. At the end, if there's something you want to ask individually, and just give me a call or send me an email. I'll be happy to spend some time with you. So we're trying to advance this. Okay. Just because you always have to do learning objectives, but there are really three things we're going to cover today. It is really fundamentally helping you understand at a pretty baseline level, sort of be able to document kind of where your firm is at financially in this pretty uncertain time. Sort of help you understand the short and long-term decisions that could impact your financial health. And then begin to think about developing a plan to monitor and communicate the ongoing impact of these decisions. We're not specifically going to talk about should you lay staff off, those kind of things. Be happy to talk about that individually. But this is designed more to give you information to make those kinds of decisions as you look at the future of your firm. We're really going to talk about kind of three variables or three levers that you can impact, and then I'm going to give you a couple of planning tools. And this is meant to be pretty straightforward. Some of you may know this, some of you this may be a refresher, but I think it deliberately is trying to sort of break it down into some pretty simple components. When I work with firms financially, I said there's really, outside of the design work you do, and we're all doing this to do great design, but from a financial standpoint, there are really three things that you can control. You can control indirect expenses, which we'll talk about in a moment, indirect labor, and direct labor. Those are the variables of your business. And then there's a lot of things we can look at. I tend to think these are the three simplest ways to sort of evaluate the dashboard of how your business is doing. So we'll look at these, and then as we look at them, we'll move into, so how do these impact what I'm doing? We will also look at two tools at the end. One is a revenue projection of looking at over a period of time, and then how does that impact cash flow? So indirect expenses, many of you know what these are. It's those things that I refer to as, it's the cost of doing business. In a lot of ways, if you had no business, there was not a client you had, and you had set up your business, these are the indirect expenses, the things that a lot of times by contract, by agreement, short or long term, you have in place, and you can look at them pretty straightforward. But there's the indirect expenses is just exactly what it says. It's those that don't directly impact the project. It's sometimes referred to as the infrastructure. I just highlighted, as you think about your indirect expenses, a significant number of indirect expenses, as I said, are under contract or under obligation. I highlighted those that you might be able to begin to have some impact on. Certainly firms I'm working with are talking to their lender or their landlord about reducing or postponing some rent. Usually utilities, that if it gets really bad, you probably can get some deferred payment. You certainly can postpone maintenance. Healthcare, insurance is one. You may be able to shift a little bit of what you're paying versus what your employees are paying. That's probably one way you can negotiate. Payroll taxes, professional insurance, you can't do much about. Your dues, you might be able to, often professional societies do some deferred payment. You certainly can put off buying technology, the equipment piece. But again, sometimes those are leases, could include software. The technology infrastructure, relatively a small cost in today's world, but probably can't do too much about it. If you have leased vehicles, you can watch your professional fees. Professional fees would be attorneys, could be marketing people, could be accountants. Although, you may not have too much that you can live. Bank charges, those are interest payments or any kind of fees that they have. In indirect expenses, the two areas that are probably most ability to change or to vary would be marketing, which would be attending conferences, although today there aren't many conferences we can attend. Certainly, if you were working, I have a firm that was in the middle of a redesign of their website, a classic marketing expense. They're postponing that. And business development would be more direct sales or direct pursuit of a project. We'll talk a little bit more about that. You certainly are going to do that, but encourage you to do that with moderation. And we'll talk about that in a moment. So indirect expenses are those things that, unfortunately, in experience is an area you can't change too much. Indirect labor, and by the way, when we talk about indirect labor, it's the raw labor expense. If you're paying somebody $30 an hour you use when you're calculating indirect. It is the direct labor expense. So there, when you think about your firm, you certainly have planned labor. You have your support staff. It could be marketing, business development, operations, administration, finance. You've planned for those. Your design staff, most all design staff has some indirect expense. Marketing, business development, operations, training, PTO, those are all sort of planned indirect expenses, which we'll talk about in a moment. What tends to happen in these uncertain times is our indirect labor goes up. And it can go up for a very varied reasons. Certainly there could be more opportunities for marketing and business development. Excuse me, I have some allergies and like my nose is gonna, you can all see that, I'm sure. At any rate, we'll talk about this in a moment, but often what happens in these times when things might be becoming a little bit slower, you will tend to spend time on increasing business development. I think we should, we're trying to find more work. And so that might increase. An area that significantly can happen in these uncertain times is either because we have the time, potentially because we're working remotely, we're having a harder time staying within the scope of work. And so and probably my experience, this is where indirect labor significantly goes up, is that I'd planned, we were working through the end of the month. We started looking at invoices this time of the month, and we say, whoa, we spent $5,000, $7,000 more on this project than we had planned. Might have been because we had the time. We really wanted to do a good job. People weren't as busy. Could be because we just weren't communicating. The reality is that which was meant to be direct labor becomes an indirect expense. If you can't bill, if you write it off, it becomes an indirect expense, which we'll see in a moment, will raise your overhead. And for every dollar that you can't bill, even though it went to a project with good intent, takes away from profitability. The other area that indirect labor can grow is we have time. I certainly want to keep my staff. I want to keep them busy. So we have a little list over here of things that we've always could be process improvement projects. It could be some standards, could be CAD standards and things that we've always, we just never have enough time to get after. And so we can say, well, let's, rather than, obviously have people sitting around, we're going to have somebody spend some time on a continuous improvement project, a process improvement, or build some standards. It's a good use of time, but it is, in essence, indirect labor. And the indirect labor can be something you really have to keep your eye on. The one advice I have, if you assign people to continuous improvement projects, be very clear you have 16 hours to get this done. What happens, particularly if things are a little slower, people want to do a really good job and they really want to work hard, and that 16 hours can stretch to 24 to 32 to 40 hours. And so at the end of the month, you can have a significant increase in indirect labor. And why that's important is because this is really how you figure overhead, and several of you may know this, but overhead is a ratio of those indirect expenses that are harder to control, the indirect labor and direct labor, and that creates an overhead rate. A good overhead rate kind of by industry standards is about 165%. And then you add 15 to 20% profit times your billing rate, times your labor, will give you, a 2.5 to 3.2 times your labor to your billing rate. And why it's really important to watch that as your indirect labor potentially goes up, you could have an instance where your billing rate is not covering your overhead, which will ultimately be end up in lost revenue. So that as you plan, if your indirect labor and indirect expense and over your direct labor, which your overhead rate would be, and if you keep those ratios as you plan, you'll make money, you'll meet your planned profit. But what happens is indirect labor goes up. Indirect expenses might come down a little bit, but as I said, they're hard to control. So as your indirect labor goes up and the labor that you had planned to bill, the direct labor goes down and indirect labor goes up, your overhead goes up and your profits go down. Whenever I look at a firm that is not meeting their profit targets, we typically find it's their indirect labor is a higher ratio than their direct labor. So just really encourage you to keep your eye on those ratios of what you had planned, and we'll show that in a moment, so that you can stay within those. While you may not reach the profit levels you want, ultimately without some profit, the firm will probably run out of cash. So kind of looking at that specifically is a really simple example. Many of you do this, but to illustrate it, the plan utilization. So you had a principal and an administrative person and a couple of architects and 3 interns. And you had planned at their hourly rate what you planned to bill for them. And so your goal was $90,000 a month. And that if you did this by hours, so the principal was 50% billable, they'd have 85 billable hours and 85 non-billable hours. So together you would have a 69% utilization. That would be high, that would be good if you could do that. But would encourage you, and so what that says though is that built into that, if you'd had a 15% profit, you would have had $13,000 in profit for the month. So the variable would be no profit. You would be between 89,000 and 75,000, and somewhere in there is the profit variance. But what happened in this example, for lots of good reasons, the principal was at 40% billable. The administration person didn't bill any. The architects had more time. The interns did. And so we were at the end of the month, we were able to, we only generated $75,000 in our monthly billings. And if we go back to our example, in that case, we lost revenue of $14,000 because we were not able to bill enough for the month. And I would encourage you to do this in a simple way every month, and maybe you are, but this is like kind of a leading indicator. If I lost $14,000 in revenue for the month, the chances of picking that up in the future are tough. And so what you can see, that was a result of increased labor, increased indirect labor and decreased direct labor, which in this case resulted in a loss for the firm. There was zero profit for the month. It's an extreme case, but would encourage you to, particularly in these times, to do something very simple like this. And you may be doing it anyway, and I encourage you to just do it, even potentially doing it a couple times a month. The next tool that I kind of want to introduce is a revenue projection worksheet. And by the way, I know Megan is going to make this available. It's a pretty simple form that you could create yourself, but if somebody wants me to send them the live copy of this, I can. So I encourage this all the time, but right now, I think it's really vital. So you look at 3 categories of potential revenue. The first one is this upper lightest blue box. And these are just potential projects. Right now, those, probably are not as strong as they were, but they're things that you know of. They're just potential. You've had lunch with somebody, they told you about a project. You may have at least enough that you could say, I think that project is going to be about $50,000 fee. We could potentially start it in July, and we'll burn 10,000 one month and 15. And by the way, these are net fees. These are your fees, not considering consultants. And so it's just a way of kind of a sales funnel of saying, these are potential projects out there. Every day, kind of looking at those, what can I do to begin to move those so that I actually could maybe give a proposal to someone. The next category is proposals. And proposals are that you've actually had a contract, a conversation with a client. You've given them, you have had some understanding of what the fee would be. And while they're not under contract yet, they're projects, proposals that could start. So you have another $50,000 fee. It's going to be a slow start, but I think we could maybe bill $5,000 in August and July and 10 in September. I also put in this category as proposals for ad services. Again, it's a way on pretty simple, one spreadsheet, keep track of it, and take those and be able to project when you think those might happen. But again, a really important part is put any ad services that you think might be coming down the pike. It's just a place to track them. The thing that they can't become projects before they're proposals, and they can't become proposals before you know about them. It's just it's really a revenue projection. And then real simply, take your projects, what is our fee and what's remaining at any one month. And this, I hypothetically did this the end of October, the end of April, and began to say, I have a $100,000 fee, I only have 20 of it left, but I think we're gonna bill 10 in May and 10 in June. So you just spread out your work. It becomes harder to do if you have a lot of projects, but I've seen firms do this at a relatively large number of projects. So in this case, I have, at the end of April, I have $332,000 of fee. And that is going to, I plan to bill 87, 77, 65. It obviously is going to drop off. But I have some potentials out there that I know are going to, I hope happen. And then I have proposals, and then again, my projects. And so in this case, my capacity, I'm going to go back a slide. My capacity, my ideal billing is $89,000 a month. So, I don't know whether this cursor, you're able to see it, but 89,000 a month. And I have $87,000 that I can count on for the month. So for the month of May, I will be at 98% of capacity. And then you can just play this out. And in this, I calculated that, remember, 15% profit. So if we're 100 to 92%, 92.5%, or 7.5% of our target of 15, I'm probably okay. And so those are green. I'm going to get some profit. You could set those sort of triggers however you want it. If I'm going to get, if I'm not going to make any money to half my profit, I'd really keep my eye on it, and I'd be like 7.5%, or that's yellow, 0 to 7.5% profit. If it's red, I am going to be, at this point, projecting out in this hypothetical situation. If I don't get more work signed up that I can bill by July, I will be operating in the red. Now, realistically, I think you can never project more than 3 months. In today's environment, it may be 60 days, but it's a simple little tool of just looking and saying, I can count on my revenue. Now, this is a little different than backlog. We often talk about what's my backlog. Backlog can make you feel good or make you feel not so good, but backlog is simply, I have $332,000 in contracts. My burn rate is 89,000, so I'd have like 3.5 months and I'm out of work. It's an interesting thing. The industry use it. I don't think it's a particularly good planning tool because this is just more granular. You'll see in a moment. I actually, in these kind of times, recommend you do this. If you collect timesheets at the middle of the month, it's probably a good idea to do your revenue projections twice a month. When I was at Design Workshop, we obviously had this somewhat automated, but for 200 people, we did this very same process twice a month and used this color code. Just it helps you focus on where those issues are. The second tool is cash flow planning, and sometimes QuickBooks, Azura, other tools you may have, Deltek, may have a cash flow planning. I find this pretty simple tool, easy to sort of conceptually understand, and it helps you make really good decisions. So again, you look at your accounts receivable. What's the invoice date? When did I invoice it? What was the net invoice? What was the reimbursables or consultants and the total invoice? And just update this monthly. So it begins to say that, this month I'm going to bill $204,000. And that's my accounts receivable. It's not what I'm billing for the month. I'm billing actually $75,000. But the thing that's also really important that this gets it in one place is you look at this project, which is I invoiced in January. At April, I'm now 90 days past due. And it's significant, particularly in today's world. I think you have to really be careful to watch your accounts receivable. It's 90 days. That's certainly a place I would begin to negotiate. I need that money. I'm now your bank. And so, that money doesn't flow to me. It's also important to keep track of your consultant billings. because as you get those, can be a tendency, well, I'm going to slide off my consultants a little bit. Certainly encourage you to pay them. So in this case, then what it's saying is that of this project invoice, which I billed the end of February for $25,000, 3,500 was reimbursable, that I believe I will get that money in May. And you can just, it's a very manual process, but it's a way of projecting when I bill it, kind of historically, when I will get paid. Because I'm looking at the beginning of May, I had $175,000 in the bank in this example. I think I'm going to get $75,000 in accounts accounts receivable. I have my indirect expenses. I have my labor, which might vary a little bit, but I have my labor, and I have the direct expenses, because embedded in those invoices was $10,500. So for this month, I started at $175,000. I took in 25. I paid 85. At the end of May, I have $165,000 in the bank, and then so that you just keep doing this month after month. You update it, but it begins to say in September, if I don't, that's when I've gotten to a point where I've burned through my cash, and cash planning is probably as important as anything you're doing right now. So it's just another simple tool. And so what you're kind of looking at as you run your business right now is these little levers. I can control indirect expenses. Certainly there are a few we talked about where I can say, I'm not going to spend the money on that. I'm going to try to renegotiate leases, any kind of areas that I can begin to at least short-term lower expenses. I'm going to be careful and watch my ratio of direct and indirect expenses, being really careful about not increasing indirect, because direct labor is what will drive my revenue projections. And both my indirect expense and my revenue projections ultimately balance my cash flow. And cash, metaphorically, tongue-in-cheek, cash is king. But when we run out of cash, is when we come in trouble. And clearly, the sooner you know and can project when that cash breaking point is, the better off you are. So I'm going to just summarize, and then we'll have some time for questions. So one is just, doggedly look for places to reduce indirect expense where you can. As I said, there aren't as many as there are. Really monitor indirect labor. You're looking at timesheets, looking at really, where labor that you're paying somebody but does not result in income. And certainly there's going to be some of that. It's just, again, plan for it. The worst thing that can happen is at the end of the month is, wow, I had a significant amount of indirect labor that I didn't plan on. And by then it's too late to do anything about it. We talked about is really eliminating cost overruns. Again, don't be surprised at the end of the month. Gee, we went over $5,000, $10,000 on that project. We had the time. It was good work. People were working hard and trying to, really do a good job. But we can't bill it. And if I can't bill it, that comes out of my cash because I had to keep paying people. One of the ways is be really wise about requesting ad services before you do the work so that you can recognize the revenue. I think in times like this, would encourage everyone always to request initial fees, 30%, 20%, whatever you can. I think clients today understand the cash flow. And so I personally recommend having an initial fee versus a deposit. A deposit can often be viewed as, I will get the deposit at the end of the project. And in these uncertain times, the project may stop before you get to the end, and they may require you to give the deposit back. I just, language-wise, I encourage initial fees, but I would really be very serious about talking to your clients about asking for an initial fee. Monitor accounts receivable. I think in today's world, clients just realize that your accounts receivable are their accounts payable, and they're going to unintendedly, potentially allow you to be their bank. And I would be having very serious conversations when anything gets past 60. And if it gets past 90, historically, it's a lot harder to collect the money. I would have very serious conversations with clients. I can't be your bank. And if you can't pay me, we're going to have to stop the project. A really significant thing is to think about new business opportunities. Obviously, you want to seek every opportunity to expand clients, to expand services. The thing to be really careful about is watch and evaluate these new opportunities. What I've seen firms do is, I call it the Treadmill of Hope. I have time. I heard about this project. I am going to knock it out of the park. I am going to do a significant amount of upfront work. I'm going to give them a lot of conceptual ideas. While that is certainly a personal decision, you have to realize that that cost to win the work will be indirect labor. And we can look like we're very busy, working really hard, but I can't turn it into revenue. And so you have to really carefully evaluate the cost to pursue that work and what are the chances of winning. I've just seen firms in these, they fall in love with opportunities and overcommit to try to win the work. So the cost of doing the work is really high, the cost to win the work. And they really didn't have much of a chance either from a portfolio, relationship, whatever. So just seek as many opportunities, but make sure it's, there's a really good opportunity. Lastly, make sure that the client actually has the money. I think this is a very opportune time to, if you have not worked with a client before, ask about how they're going to pay. Where does their financing come from? We can fall in love with these opportunities, and then at the end of the day, not have, we've worked hard, we've done great things, but we don't have the money to carry on. Encourage you, depending on your firm, to just look at your revenue projections a couple of times a month, mid-month, collect your, you can, at the middle of the month, you can begin to correct. Once the invoices or the timesheets are done, at the end of the month, you have very little chance to make corrections. Highly encourage you through this process to talk with your staff. They know what's going on. Ask them where they think where they might be able to save money, either in indirect labor, indirect expense. I think I've learned through this process to really have strong communications with them, seek their input. There's a tendency to think, well, I don't want to burden them with this. They know what's going on. I would encourage the conversations. Obviously, continue to communicate with consultants. They're looking for their money. You can, where you can, try to negotiate with them some ways of potentially lowering some of the cost of their work. If you are get in a place where you're having trouble keeping up with consultants and paying them, talk with them. These are long-term relationships. And then lastly, communicate with clients. Every client that we have is in a similar boat. I think it's a great time to talk about, the scope of work, what you're doing, how we're going to get paid. With that, we've got about 20 minutes left. Mike, I'll turn it back to you. I don't know if we have any questions.
All right, thanks, Doug. Great stuff, and there's no better time to increase our financial literacy than right now, of course. So some follow-up questions. You mentioned how you don't want your clients to put the firms in a position of being their bank. I'm wondering though, we have the opportunity as design firms to put people in that position too. Opportunity is the wrong word there. We can get in that situation as well as firms with our consultants as well. So what's the process that you would recommend using if you're behind on client payments, but your consultants are still billing time? Do you wait until the client money is in hand?
So I want to make sure I understood the question. So the client.
So let's say the architecture firm is the prime on a project, and they're getting, their relationship with the client is to tell them the billable hours, invoice them, get paid. The client may delay payments, making you the bank, but you also have on your project team consultants that are part of that billable time too. So you don't want to pass it down the hill necessarily, pass the pain down to your consultants, but obviously if you don't have it coming in from the clients, you don't have it to pay.
I mean, there are, in really good times, there are firms that say we pay our consultants whether we got paid or not. If they have strong cash flow and can do that, that obviously endures you to your clients or to your consultants. Having been a consultant, particularly in my design workshop days, we were often a prime or a consultant to an architectural firm, and we got paid when they got paid. So now the point, again, this gets back to the communication. If the client is not paying you as the architecture firm, I strongly have conversations with your consultants. We're not getting paid. We will pay you as soon as we get paid, and deliberately and diligently pay them. You can, if the architecture firm gets behind, they can, well, I just got this $100,000 check. I'm going to take care of my employees, and then you get on this slippery slope of your consultants. So it's, again, in that little example, is really know where your consultant bills are. I don't think most consultants are going to expect to be paid today if you haven't been paid. But again, communicate it.
Yeah. Well, it's certainly a challenging time for everybody, and I expect people would understand that payments are slow, even if they're on the receiving end of that from a firm. What if a firm is on the receiving end of some of the advice that you gave to renegotiate contracts or some of the accounts payable?
So you're saying that the client is not able to pay, but so you renegotiate something?
Yeah.
I mean, it certainly is better than, if cash is an issue and they can say, I owe you $60,000 and the first ideal would be, and get this in writing, so you owe you 60, I'm going to pay you 20 a month for the next 3 months. That would be ideal. You can take some cash discounts. My experience is if they owe you, we'll go back to 60, and they say, I'm willing to pay you 55 of it if we can, I want you to discount it $5,000. I think in general that's a slippery slope. Unless it's a significant discount and they can't pay it, then why are we arguing over $5,000? So first step is try to split it, try to get an extended payment.
Installment approach.
Yeah, I mean, most every agreement has some interest payments in it. We rarely charge it. I think in these kinds of times, if you have good conversations with clients, say, look, I have to borrow the money to pay my employees. And it's probably, so again, just communication, but be really, really careful about the client who is stringing you along and, not. I mean, the only one other piece in there is if they're not paying, particularly if it's public work, find out, is there a form and is there something that we haven't done in order to get paid? I've had a couple of clients who've done significant public work, and there's certain forms and formats and ways in which the invoice has to be submitted. A client never calls you and says, gee, I'd love to pay you, but you didn't submit your invoice right. So, boy, just continue to communicate. You haven't gotten paid. Is there a problem with the invoice? Most of us just can't afford to be the bank.
Yeah. And you want to make sure that you stake your claim on any future payments as well. So there are, especially in public work, some forms and paperwork that goes along with that. I thought it was a good piece of advice on additional services to make sure that you think about those pretty carefully. And if there's ever something that would require a modification of your contract, then go ahead and make that modification and get it in writing. I think there's been a tendency to say it'll all work out in the end. And we can't bank on that right now. Hope is not a plan.
You don't know what the end is.
Right. And the end may be the project shut down. The client or the developer just walks away from it.
And it is much easier to say, at the beginning, before we do the work, we'll be happy to do that work. And I think there's a tendency in these tougher times, we all want to be nice. And, we don't want to anger the client. But then you start thinking about, well, if I don't get that ad service, that means in 60 days, I'm going to be sitting in a conference room with an employee that I can't pay. So it's that kind of honest balance with yourself, but smaller $10,000 or so, ad services, depending on the size of the project, are much more palatable than at the end of the project and say, well, gee, we did all this extra work. Could I bill you $75,000? The work's done. Chances of getting it are really slim then.
Very small, yeah. Do you see that there's any differences or challenges in a remote work environment for recording the billable time of project team members?
I think there can be. I think what I've seen, and we've got Zoom and other kinds of technology. I think firms, leaders are having to spend extra time to check in with their employees. I believe all employees want to do the best. But when they're remote, they may tend to work a little bit longer without asking a question. Particularly younger employees don't know what to ask. They don't want to bother the principal. I think it's incumbent on the leaders of the firm to use technology, conversations about you have any questions, outline the work. Be really careful that with all good intention, someone could be spending extra time and you don't know it. I don't ever think it's malicious. It's just they don't know what, they just don't have the supervisor, or there could be a miscommunication. I thought you wanted me to go ahead. So again, communications are really important.
Right. Great question from the audience. In your work with your clients during this particular recession, is there anything uniquely different in this downturn from others in the recent past?
There's a couple, unfortunately. This was so quick. It was literally, those of us who've been through the other slowdowns, we could, it kind of crept up. I think this one was so quick and so broad that, in some ways I think it's never better, but it forced you, boy, I have got to make some decisions really quickly.
Yeah.
So I think it's that part of it is just the sort of the speed at which it came upon us. I think made many firms kind of quicker to make decisions. I think the tougher part is, we've been through other natural disasters, and we could see in 30 days things are going to be. I think the lack of clarity of when things get back to normal. I was on a call with the governor for another reason, and they don't know. I mean, they're doing their best. They're using data. So the unpredictability is higher, I think, than the normal, which then comes back to some of the tools. The more you know about your own business, I think the better you can respond in this pretty unpredictable time.
Yeah, and that's not dependent on scale of your firm either, right? All the tools you showed are for everything from a one-person office to a huge hundreds of person multi-state.
I mean, we used at Design Workshop, I had a couple hundred people. I mean, obviously we had some technology, but I deliberately just kind of try to keep them simple so you can, I find if you sort of understand what's happening, I think it gives you more comfort in the decisions you need to make.
Mm-hmm. What if you haven't done any of that work? Where should somebody start?
It's a great question. I think I would start back, even if you haven't done it. I'm gonna go back to this. Oops. Hopefully I didn't screw us up here. I would go back to this start right here and say, have I got everything messed up now?
We're seeing the planned and actual utilization slide.
Yeah, okay. So I would start there and just say, here's my employees that I have. This is how much what I had planned to bill. I think it all starts from this one. And then the second one is, that was my plan. And at the beginning of the month, and the end of the month and maybe the middle month, where am I? If this is the predictor, if billable time does not hit timesheets, and you can't bill it, it will ultimately eat at your profit, which ultimately will your cash is a derivative of profit. So I think this is probably the best place to start.
Another question from the audience was, are these tools evergreen? So in other words, do you change the tools in good times versus bad times?
I don't think so. It's interesting. Um, I think you always want to monitor your direct and indirect expenses. You want to always understand the work you have and when it will bill, and you want to always understand the the cash you have. In better times, you may not be quite as worried about as your accounts receivable
Mm-hmm.
and your payment, but I think that the tools, you can be a little more lenient with indirect labor and expenses in more robust times. But I as I work with firms, I encourage them. These are just simple little dashboards of how are we, and this is where are we spending our money, and where are we, where's the fuel, and where's it going?
Mm-hmm. If you don't work with these every day, what are some, other than, and have the experience to have a gut feeling, I guess, about how some of these projects are trending up or down, and the client's ability to pay, what are some early warning signs or red flags that you've seen? Like it could be clients not very responsive to messages, or they're slow paying, or asking, some strange questions.
Um, I think I've always said in general, happy clients that are pleased, want you to be successful in your business. And one of the areas that we do look for is when we get extended payment. There's some clients that just inherently pay slow. But one of the things we always are looking for is if the client is not paying, are they unhappy? Is there something that we've done or have not done? Is there something internally going on with the client? Are they not getting their funding?
Or maybe they've had a personnel change where the person you have always sent the invoice to has changed, and there's a new person they're not here.
I think it's really important to just watch that. I mean, and again, the thing that I always worry about, this is when I was a chief operating officer myself, was, I understand we sometimes do more work on a project than we planned. I want that to be that we plan to spend more time on it. Not at the end of the month, we did the timesheets and said, holy smokes, we spent $7,000 more this month than we planned.
Yeah.
Those surprises, it's too late to do anything about it then.
Well, before we ask one more question to wrap up and give Doug the last word, I want to remind people how to get credit for today's session. If you use your chat function and have it go to all panelists, enter your AIA member number, and we will make sure that gets credited. So again, use the chat function. If you don't already have it up, it's on the bottom of your screen for your Zoom viewer. And when you click on that, enter in your member number, and we'll be sure to make sure that gets added to your transcript for recording this learning unit on your CES credits. The last thing I want to say, Doug, is that we're in a business that is very human-centered, not only on the client side, but on the production side. It can't be done without the talent that's in these firms. And unfortunately, when times are bad, that means that the cost is borne by people more than anything else. We can't just stop the assembly line and like curtail our orders of durable goods or things that go into manufacturing something. It really is about people. So we want to make sure that they get utilized, even if they're not billed. One thing I'm seeing, and I want your reaction, is how can you redeploy people, maybe instead of from design production to some of those either process improvements or marketing and business development. I know there are specialists who work on that, but maybe in times like these, we could keep people working and redeploy them away from billable hours and to some of those longer term strategies.
Yeah, I think I think a firm ought to always have a little list of here are some process improvement things we ought to work on. I think, again, you can use your staff. This gets back to the conversation of saying to your staff, look, we're obviously in this time. Where could, are you interested in some, helping them with some business development or marketing, or who do you know? Again, have a conversation. Ask them where they think they can contribute. And as much as I think that's a really good idea, you need to plan how much of that time you can afford, because it's a legitimate, important investment. All we have is staff at the end of the day, and we want to retain them as long as we can. And I'm not advocating in any means that this all has to be done at the expense of the staff. Don't want it to be, but as the owner of the firm, really encourage you to just understand when you move to more indirect expenses, what's that mean? Because if it goes on too long, the firm can have a more serious problem. So just plan on what you're doing and make wise decisions.
Well, there's a lot that's unpredictable about the situation we find ourselves in, but you've given us a lot of tools to help make it more manageable, and we really appreciate that. This presentation will be available if you'd like to view it at a later time, maybe look back on something that you weren't chatting or catching notes quickly enough. Doug's also been gracious to agree to make this slide deck available, so you can review those notes. And I do want to point out that the last slide on there has his contact information. So if you'd like more in-depth information, follow up with a question.
Just don't hesitate to give me a call. I'm more than willing to spend a few minutes on the phone with anybody in these times. So.
Well, thank you, Doug. We appreciate your insight. And thank you, attendees, for joining us today. If you have time, tomorrow we have a conversation with firm principals from larger firms. And then next week we have 2 sessions, one on Tuesday and one on Wednesday, both focused on sustainability and resilience. So we'll start with net zero energy design on Tuesday. And then on Wednesday, we have the 2030 commitment. All those, again, are going to be at noon. And we hope to see you soon, one way or another, either in the virtual space or elsewhere. Have a great rest of the week, and thanks for joining us today.